Hey guys, Darren here. Thanks for joining the September 4th, 2023 Stock Options Market Weekly Update. We're going to cover where we are in the market today, what happened last week as far as the S&P 500 and the different sectors. We're going to talk about some of the numbers that came out last week as well, including core PCE. We'll talk about interest rates real quick, and then we'll jump into the trades that we've got on the option trading platform. I think it's important that we understand the ways that the rich are getting richer so that we can do the same and have the tools to profit in any market. I promise we're going to dig into many option details, tips and tricks so that we can profit together in any market. Please go ahead and make sure you hit that like button so we can get this video out to as many people as possible. And if you haven't subscribed already, do that as well so you're informed of upcoming videos and we can profit together. Also, be sure and download the free options workshop in the link below. It talks about the main benefits of trading options over buying stocks alone. Disclaimer, I'm not a financial planner. Please do your own research. I'm not recommending trades. If you're learning or new to options, I do recommend you start small. All right, guys, let's get started. Where are we at in the market today? We started the S&P down here at 4406 and ended up at 4415. So we were up about 2% for the week. And annually, if we look at Trading View SPX for the S&P 500, we are up 15% this year. We started at 38.24. The PE, the price to earnings ratio for the S&P is about 18.8, so still a little high. 17 is the 10-year average. IVRs and IVs, implied volatility, is very low right now, so it is a little difficult to sell premium and find trades. I do have more cash on the sidelines than typical. There were some numbers that came out last week. If we look here, Tuesday we had consumer confidence come out. The actual was 106. The previous was 114. So consumer confidence is a little bit down right now. GDP, we had a revision down to 2.1%. So not good as well. The core PCE was 0.2 as expected. But overall, the PCE year over year rose to 3.3 from 3, so a little bit higher. And then Friday, we had the U.S. unemployment rate came out, and it came out at 3.8% versus 3.5. So we did have that drop towards the end of the week, but not too much, just slight. So let's get into the trades that we've got. Well, actually, you know what? Let's go back. We've got more to cover here. Let's look at the FedWatch tool. So it's not expected to have an interest rate cut until May of next year. So we're still going to be, according to the CME FedWatch tool, at 5.25 to 5.5, all the way through May of next year. You can see it in March, in January, December, November, all expected to be 5.25 to 5.5, and not until May of next year. Some are even talking with the numbers going down that, hey, we could have more inflation and there could be another rate hike. So hopefully that's not the case. Let's look at, we've got a earnings insight, FactSet earnings insight report that came out as well. There wasn't one for a couple of weeks, but the numbers came out, and let's cover that real quick. But we had Q2 year over year earnings decline of 4.1%, down from 7% previous. And the 12-month forward PE for the S&P is 18.8, and the 10-year average is 17.5, like we indicated. If we go to page 15 on this report, we can look at the projections for Q3. Analysts are projecting 0.5% earnings growth and revenue growth of 1.6, and then for calendar year 2024, things are getting back to normal growth and projected earnings growth of 12% and revenue growth of 5.6%. So things are should get back to normal again in the middle of next year. And I think stocks are going to trade in a range until 6 to 9 months before that Fed rate cut expected in May. So towards the end of the year, beginning of the year, I think we're going to be trading in that range. Covering the different sectors, energy. Let's see, we've got page 33 here covering the different sectors. And the ones that I like, of course, are energy, current PE of 11 versus 15. So again, that's somewhat on sale, but oil's moved up over the past couple of weeks, and you probably noticed at the gas pumps it's pretty high right now. So some of those energy stocks are up quite a bit. So I'm waiting for a little bit of a pullback because the IVRs are very low as well. So it is tough to trade options. Real estate is a little cheap, 16 PE versus 19 over the past 5 years. So it's expected to do well as well. If we move to one of the last pages on this report, you can see the analyst expectations, and energy, as far as buys are in green, holds are in yellow, but they're saying energy, communication services, healthcare, infotech, consumer discretionary, but it is pretty balanced across the board. So it's nice to have to be diversified and have trades in a few different sectors going forward. So with that, let's jump right into the trades that we have on. We've still got corn on. Corn is really at annual low, so I am long corn and have on the 470, 460 put spread. It hasn't moved yet too much, but we've still got some room if we go to the curve mode. And again, this is the Tasty Trade platform. You can check out in the link below. I've got a link, and you can get cash back when you open an account. Appreciate it if you use the link. Channel does get a small fee and no cost to you when you do that. If you open an account with at least $2,000, which you really need to place, a few different trades as well. If we look at the analysis, anywhere above this, between 465 and 470, we're going to be profitable, and we're at 42. So we're still in that range. So I'm looking for that to come in and collect more of this remaining $133 left in option premium. Now, we normally trades with corn, but it's been killing me lately. It's down to 5.95, so it's dropped even more than corn, but you can see they trade together. Once they get out of line, sometimes I'll do a pairs trade, one against the other, but I mean, they're both down right now, so I've got long trades on them both. 5.95 is where it's trading today, and I've got two put spreads, $5 wide, and we are profitable right down to that 5.95 pretty much. So we're almost break even right now, even though it says we're down $202. It just hasn't come in yet, that premium. So we'll just wait, and hopefully we'll get an up week next week. Analog devices, 175 to 190. We should be pretty well in the middle of that, in the middle of that range. So we're in good position there. It's kind of been trading in a little bit of a range. We've got right now the price at 182, and see, this is what I'm talking about. IVR is just so low right now. So it still has not come in for some reason. It shows 47. We still got $92, and we're right in the middle of the range. As far as the options chain, if we just look over the last 30 days, we made 150 bucks. So we've done okay in analog devices. We're going to wait for that premium to come in. A lot of the times, it's come in by 13 DTE, but because IVR is so low, it has not. Well, actually, that should make it come in, but it just hasn't for some reason. So we'll hang on there. AMD, we've done pretty well in. We're hanging on as well. We've got $138 left to still profit in premium. It's at 109. I think it was at 102. Yeah, so it moved up last week, and we're right in the middle of the range. So we're actually doing okay in there. And yeah, we made $387 over the last 30 days. So that's doing pretty well for us. Bank of America, we know the story there. I like the banks, but again, it may be some time until they come back, until we have that uptick near the beginning of the year. I think what I'm going to do is just continue to hold these leaps, and then on any big up day, I'm going to sell calls against them. DraftKings has done pretty well for us. I did sell some 33 calls against my 2 leaps, and I moved them out to October. So we closed the SEP, and I skipped Costco, but I'll go back to that. So we've done well over the last year. I think we've done like 1,000. Yeah, we've done $1,000 over the last year trading DraftKings, and being long and trading calls against them. So we've done pretty well there, and you can see we're in the profit range, and as it continues up, we're going to continue to profit more. I'm going to go back to Costco because we did have a trade on in Costco last week that is no longer showing because I closed it out. But if we look at Costco and we look at that, made a little over $100 in the last 365 days. So no big deal there, but you can see that we closed this trade last week. We put it on. IVR was high. It was up, well, it wasn't too much higher than it is now, but it was up a little bit higher. We did a $166 trade on August 21st, and it was a iron condor. And then we had that move up last week to close to 560, the short strike. If you look at here, we had to move up to 555, and that's where I decided that what I was going to do, since it's getting near to testing and we were at 14 days to expiration, I went ahead and closed it out for $72 and just made the small $94 profit. But that's what we did in Costco and how we handled that. In phase, we've got a 120, 115 put spread moved out to October because we're getting inside that, in that 10 to 15 DTE range. It is up to 128 now, so it is doing pretty well. And recently, yeah, we're up a little bit, but not a lot. We're gonna wait. We're gonna be long and wait for that to come back. We're profitable all the way down to 118. We're at 128 now. Enphase is a great company, so we're gonna stay long. Let's see. FCX is another one that I closed out last week. Year to date, we've made what, $282 in FCX, but IVR was down to 1.1. We had an iron condor on. We actually lost money on this latest iron condor, $34. So hey, I'm going to show you the bad trades as well as the good, but it did move up. You can see 41, so it's made a big move up. I like FCX, but I don't like it when it moves up that fast. I like to buy it when it's low because I think good company and the mining, and it provides a little diversification. But that was testing our strikes, so we got out for a limited loss on that. First Solar, this one, yeah, this one's staying right in the middle of that range. We've got on the 140, 150, and 220, 230. We've got this is coming. The expiration is the 20th of October, prior to the earnings date, so that's good for us. So most of this $162 left in premium should come in before the earnings date. Over the last 180 days, we've made $312. So we're going to leave that on, wait for it to come in, and see what it does for earnings. Google has continued to go up. It's at highs. I hate to bet against this behemoth, but we've made 150. We've got 36 left to make. I think we will just, I could wait and see. I'm just going to leave it on so that I can collect that remaining $36. And if it does drop down below, I'll roll out and collect more premium. Typically IVR, if it did drop, would go up. And Google does have earnings on the 24th, but we're still in September, so we'll just wait and then maybe put an earnings play on. Lowe's has been pretty much straight up high. And, I was wondering, I'm thinking interest rates are going up or are up. And, but what it means is more people are staying in their homes and they're not putting them on the market. So Lowe's has done pretty well, but I bet against it with the short play. I may need to rethink that, but right now there's, I could close it out for a small loss, but IVR is so low, and I need to have some negative, some hedges, and it is kind of at highs, so I'm going to leave it on. Medical properties, we talked about that. It got killed by a Wall Street Journal article, and the two hospital chains not having financial problems, but it's got a huge dividend that was cut, but it's still a good dividend and they can pay, and they're in good financial position. So I'm not going to sell when it's at lows. I'm just going to hang on. We've just got 400 shares of stock. Palantir has done, I like the company. It is down. It typically trades in this range between, 14 and 20, and we're down at 15. So I'm going to be long, and you can see we make money as the stock goes up. But we've got on a leaps and a 15 put. I'm not going to sell anything against it. IVR is low, and I think it's not going to go much lower at this point. PayPal I like as well. We rolled out to October. Over the last year, we've done pretty good in PayPal. Let's see, a couple $100 in PayPal. But we've got on the 60-65 put spread. IVR is low. Wish it was higher. You can see where we're profitable. So we're still in that profit range. So we'll wait for that IVR or for the premium to come in going forward. But we rolled out there. Q's, the NASDAQ. Let's see. It's down. It's at 377 from 364. So it continues to move up. But that's kind of a hedge. I'd like to be long a Russell short NASDAQ at this stage. There's 13 days left. We're still below our 380 call, so we're still in the profit range. We just need it to stay or move down. And again, Friday there wasn't great news, so we might have a move down next week. We'll see. SOFI I think is a great bank stock. Mobile app, online, a lot of different parts of banking and finance. So you've heard me say before, definitely long. So I've got leaps and outright shares. Can't believe it's down at in the $8 range, but we're going to stay long at this range definitely, and watch that'll double when the market does move up, and maybe possibly higher. SOXL, the semiconductor 3 times bull ETF. We've done well in that. $13 left. I need to close that out. Probably do that sometime next week. I wanted to leave it on, see if IV ticks up, IVR, and then we could maybe put it on in October, but we'll see. TDOC, Teladoc. Let's see. Oh, I'm skipping SPX. So SPX, interesting lot last week. There's a lot of interest in SPX, and I have to apologize. We've done pretty well, 900 bucks over the last 30 days, but I got kind of caught up last week. The problem with SPX and trading the zero DTE is you have to be in front of your computer all the time. And if you have something come up like I did on Wednesday, then this is what happens. Positions expire and you get caught. But, I kind of lucked out. But I'm going to continue. I'm not going to cover it in this video, but there were lots of trades that I put on last weekend, the week before, but I need to do a separate video and a little bit more history with SPX going forward and trading. But I've got to get in a situation where if for some reason I'm not able to be in front of my computer, I don't get expiring positions and stopped out at that point. But we'll have some videos coming up on that. So Teladoc, and by the way, let me know what you're doing in SPX and what's working for you. But I typically use it as a hedge, and I sell at the money call credit spreads against the market in my other positions. Teladoc, we've done pretty well over the last year. Let's see, over the last year we've done 900 bucks in Teladoc. But we've got on a leaps option. Any big move up, I might sell a call, but IVR is so low at negative 1.4. Bonds, TLT, it's at annual lows. So I put on a long bond position. I don't normally trade bonds, but the IVR was actually up. And it's so far down that I just said, hey, what the heck, I'll trade some bonds. And, we're up $41 on this trade. Anywhere above 94, and we're at 94.85. Actually probably down to 93 because of the premium collected. We're going to be profitable. So still holding on with 13 days to expiration, but may close that out next week. Toll Brothers. All right. Now this one, interesting. Toll Brothers, we moved out to October. Not doing great for us right now. Yeah, we're down over the last 30 days, and it's been going straight up. You can see it's at highs, and I bet against it because it's at highs, and I figure real estate, may be tough going forward, but with interest rates likely to be high for the next year or so, and no cuts until May of next year, that means that there's going to be less existing home sales, and that drives demand for new home sales. So I think that's why it's up, but I'm on at this point and short it, and I don't mind being short. I don't think it's going to skyrocket up any further because it is at those highs already. So I'm okay being short, but we're going to hope that comes down. Verizon, huge dividend, so I just got 100 shares of stock, a little bit of diversification, and then Wells, a bank that I like, and I've got calls against it, and a leaps option. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Also, be sure and hit like and subscribe. I really appreciate it. We want to get the video out to more people. And let me know what you're trading. Any comments that you have, any questions, let me know down below. And look forward to seeing you in the next one.